Hey guys, it's Navi with TendieTrader. Welcome to the video. In today's video, we're going to be talking about B2B versus B2C companies, their stocks, and how you should personally view and approach them. Before we get into that though, don't forget to hit subscribe. If you even learn one tidbit of information from this, drop us a comment below. Let us know what it is, as well as visit TendieTrader.com for some more great videos, articles, and content on not only how to invest, but also to grow and save your money. All right, so what does B2B versus B2C mean? Well, it's actually super simple. They're just acronyms for business to business or business to consumer. It's essentially their sales model. Are they creating services and goods that they're selling to other businesses, or are they creating services and goods that they're selling directly to the end consumer? So the question you got to ask yourself is, who is their customer? Um, a great example of this, Chewy, Carvana, Etsy, eBay, all of these are B2C type services, right? Ultimately, they're providing an e-commerce service for the average person, an individual, that end buyer. On the flip side, you can kind of think of IBM, Microsoft. A lot of their revenues are being driven by business to business sales. Uh, Again, the problem with those last two examples, I'm going to point those last two out in particular because most companies aren't in one category or the other, right? Like Microsoft sells tablets, they sell computers directly to the end customer. So revenues are typically a blend of multiple business units. They comprise of both B2B and B2C interactions and profits, revenues. But the question is to ask yourself, where are they focused, right? Actually, for this example, let's take Amazon. Um, Amazon is e-commerce, has been e-commerce, but they're also Amazon Web Services is pretty much the infrastructure of the internet. Many companies are moving to AWS, and they're going to continue to dominate in that space. So it's like when you look at Amazon, what is their forefront? Where are they focused? What direction are they going? All of those are questions that you need to ask yourself. And ultimately, based on the direction that they're going and the investments that they're making on their own technology and their own business, how is that going to be influenced by current economic conditions? 2020, coronavirus is a prime example of how things got just flipped on a dime, right? And companies that were going to benefit, they benefited radically from these economic conditions. Think Peloton, think Zoom Video, um, Shopify is another great example. But then on the flip side, the companies that were inversely impacted pretty much went to zero, right? Travel, hotels, casinos. Those were severely impacted because their revenue streams dried up. So try to anticipate and try to understand, where's the future? What direction are they moving in? How is that going to play out? And ultimately, you can get a better sense of whether they're focused more on B2B, B2C. Will current economic conditions impact either of those business models, and how they will impact either of those business models? So B2B versus B2C is a extremely important distinction to make and understand when you're looking at a company that you'd like to invest in. All right, well, that was it for today's quick tidbit of knowledge. Hopefully, you learned something. If you did, please hit subscribe, leave us a comment below, and visit TendieTrader.com for more great articles and videos. Appreciate you guys watching and catch y'all on the flip side.